everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, the market finished the week on a down note. We closed out a pretty strong July. We had the month's Fed meeting this week, and the Federal Reserve basically came out and said they're going to keep the pedal to the metal on the liquidity flowing, as they have concerns about this Delta variant and the effects on the economic recovery. And Bitcoin broke out. Or did it? Let's look at the charts. At the time of this recording, it is very early on Saturday morning, so the futures markets are closed. Before I get to the charts, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. And we're getting awfully close to that 25,000 number of subscribers, so if you haven't subscribed yet, please do so. And let's hit that milestone number together. Thanks, we appreciate it. All right, so taking a look at the charts, you can see there's the down day. We finished today, but again, not only was it the last trading day of the month, last trading day of the week, so as I said in the intro, the month finished pretty strong. So let's take a quick look at the monthly chart, and you can see we finished up almost 2.5% on the month, so that was pretty good. So some squaring off a position, certainly understandable. And then when we add the moving averages on, you can see all we did was really tap the 10-day moving average on the low. So the uptrend looks good there. However, if we add in the DMI, you can see that that ADX is just diving straight down. So we're creating some pretty good divergence here as far as the ADX giving no nod at all to the strength of this upward move. So there's the divergence. Market moving to the upside, the ADX saying, yeah, we're not buying it. There's really nothing behind it. We're just moving up. So when you see something like that, you also want to check volume. And volume was dead on average, which for the last trading day of the month is probably understandable there as well, so no big signals. So going back to the monthly chart, it's probably the best looking chart between the daily, weekly, and monthly, but a couple things here. It's almost a bit of a dichotomy. If you look at the DMI, it's by far the most supportive DMI of any of the charts. In fact, that looks pretty good. If you had good separation there, ADX is moving up, it's broken above 20, and the ADX is above the negative directional indicator. All the things you would want out of a DMI showing you that that trend is likely to continue. But then when we come over and look at it, it's a bit more vertical than I like. I like this 45-degree angle. I would have preferred to see the market stay on that trajectory there. So as we start to go more vertical, that's when I start to get a little concerned, because when things go vertically up, they normally come vertically back down. So I think that's a bit of an issue there. We look at the moving averages, we are starting to get a little bit of separation from the 10-day moving average, meaning a little bit of a overbought condition here. So some concerns there, even though the chart itself in a wave 3 supportive DMI doesn't look too bad. We look at the weekly chart. We talked about this a couple weeks ago, and there's even more divergence. As the market continues to move to the upside here, you can see that we have the ADX continuing to move to the downside. Now, we've been talking about storm clouds for the last several weeks, and concerns that are out there with what may be going on in the market behind the scenes. I just think this is another one. But I want to be very clear. You trade what the market gives you. The market's been moving to the upside. We closed out 4 bullish trades this week. So you trade with what the market gives you, but that doesn't mean that you can't be prudent and be cautious in what you're doing either, understanding that at some point in time we will correct. But who knows when that'll come. I said that I think the market needs a 10 to 20% correction, and people said, wow, that's a wide range. Well, let me narrow it for you. I believe the further the market goes to the upside before we correct, the closer we will get to a 20% correction. But until it comes, you trade what the trend is. The trend is your friend is an old adage, and it's an old adage for a reason, because it works. So the market's moving to the upside, you trade higher. We do have a lot of strangles on, so we're covered in case the market moves to the downside. So we trade the upside on the directional stuff. We got the strangles in case we break to the downside. So we're pretty balanced in our Elliott Wave Options portfolio at ewotrader.com. All right, so taking a look at the interest rates, which I think makes a lot of sense with the Fed meeting this week, and they basically came out and they said, we're not even thinking about raising rates. Forget that. They're concerned about, as I said in the intro, what the Delta variant and the escalation of the cases may do to the economic recovery. We'll see how that plays out. A couple things here on interest rates. Obviously, they're going to the downside, but surprisingly, they've held in there pretty well, and we do have not a really well formed, but a triangle nonetheless. So it shows that we're probably going to see a breakout in interest rates in the not too distant future. We do have some support in this area right through here, which is what we bounced off of on July 20th. And when you look at that, that looks pretty ugly. But then let's go back and take a look at where we were last year with interest rates. So when you put it into context of where we were a year ago, yeah, it's not so bad, even though that downtrend looks pretty ominous. And when we look at the 30-year, once again, they are in agreement. Also a bit of a crude-looking triangle in the 30-year as well. So you like it when the 10 and the 30-year seem to be on the same page. Remember, several weeks ago, they were at odds with each other. A little bit discombobulated is the word that I use, but now they're in sync with each other. So also want to see what the Fed's statement had to do to the dollar, or what it did to the dollar, and it weakened it. As you would expect, the dollar stayed strong up here, and then they came out with, we're not even thinking about raising rates, and so that moved things to the downside. I'm concerned about the dollar. I watch the dollar closely, even more than interest rates. I do think the Federal Reserve is trying very hard to keep interest rates at something above zero, because the rest of the world is at negative rates. And I think that's important, because if we lose the dollar, then I think we have a whole world of hurt and what could be happening economically down the road. So, my opinion, the dollar needs to stay somewhat strong. Breaking to the downside here, you can see that we came down and hit the 50-day moving average, held that for now, got a little bit oversold on the dollar, but we're moving to the downside, and if we come down here and test this 90 area again, that's when I'll start to get a little bit concerned. The GDP number came out and it was good from a normal standpoint, but it was still less than expected. So growth disappointed, if you will, even though it was a good number from a historical standpoint. So when you look at the financials, which is, I think, a smart thing to do when you have the Federal Reserve saying these things, let's take a look at the banking sector. So here's the KBE, the banking ETF, and did pretty well, actually. Down day today, but yesterday was kind of indecisive. And with a doji yesterday, right around that wave 4. But does that trend continue to the downside? I would say that that's probably very likely, with the fact that without any sort of hint, and then I guess the thinking was from all the talking heads after Powell's statement was that where it was sneaking in a little bit as to where we might get a rate hike, now is starting to push back out again. And so that's going to be very difficult as yields compress and the yield spread compresses. Hard for financials to make money. Can the market move higher without the financials? Maybe. We'll have to have some sort of leadership, and without the financials, it could be challenging. I also said in the intro that Bitcoin broke out, and boy, take a look at this. Here's that descending triangle. Now, I've talked a lot about this, and I think I've done as much research on triangles because we do so many of them in our volatility portfolio, that a descending triangle does not necessarily mean you're going to have a downside breakout. We had this head fake here, so this really ties into a lot of the rules that we talk to our subscribers about. We had this close below this support level here, but you have to have a second day, a follow through or confirmation day. The market gives head fakes all the time, and you don't want to get caught up in that. See, the very next day, close back within the triangle. And there's a lot of people that market triangles saying that an ascending triangle means you're going to break to the upside, descending triangle means you're going to break to the downside. And with all the data that I've collected and looked at over time, it doesn't support that. It's going to break one direction or the other. The good thing is triangles give you a breakout. You're going to get a nice breakout move, but there's really no way to tip your hand one way or the other as far as the direction. So we do a strangle and takes care of both sides. So with this move to the upside, that's definitely a breakout, but there's no follow through there. And then we moved up again on the 28th, and a bit of follow through here in yesterday's close. Remember, now this is a end of day data, so it figures out a closing price similar to the way futures do. And the live chart at the time of this recording is testing this 100% level now. So I wouldn't really call this much follow through because it didn't close above the high of the previous day. But if we get another close based on what's occurring right now, we're right around 41.5 on Bitcoin. And so what happens if we break above this 100% level? Then we're likely coming up to this next level. The 61.8% extension to the downside would then become resistance to the upside. And as you can see, there would also be a lot of other resistance from this consolidation that occurred back in February. So if we can break to 42,000, we may very well run up to 48,000 on Bitcoin before there's any other resistance in the way. What do you think? Leave us a comment. Are we going to break up there, or is this going to be a resistance level and we bump our head here and come back to the downside? That would have been more of a possibility without what's going on today, because that could act as some follow through. But again, we'll see where the actual close is. But pretty interesting on Bitcoin from all the rules that we talk about regarding triangles. So let's take a look at the VIX before we wrap things up. And you can see that the VIX did bounce back to the upside, and same story here that we've been talking about for a while is 16 just holds. When it breaks below it a little bit, but then gets back above it, and we have this massive descending triangle here. If you take a look at that from the peaks, that's a huge triangle, and the support being there at 16, you extend that out. So we could play ping pong back and forth here for a while between these trend lines, get another spike or two, and maybe a little bit less volatility going into the end of the summer. And then September, quite often historically, is a volatile month, and that might make sense. We move into September and start to get a volatility breakout. All that would tie together. But interesting market for sure. It keeps going higher. It gets weaker and weaker as it goes, but it's going to the upside for now. Hope you found that informative. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.